Okay, Assalamu alaikum. Welcome to our episode with Brother Maruf from UIF. Today we're going to be talking about Islamic financing and how to expedite the underwriting process. I'm going to let Brother Maruf introduce himself and then we'll get started. Brother Maruf, tell us a little bit about your role at UIF, how long you've been there, and what kind of kept you there.
Jazakallah khair, Brother Saeed, for having me here. Assalamu alaikum. My name is Maruf. I've been the district manager at UIF 10 plus years now. Alhamdulillah. Alhamdulillah. Just want to say a little bit background about UIF, University Islamic Financial. We are actually celebrating our 20th year in Islamic financing.
So you've been there for 10 years and this is okay.
This is our 20th year, alhamdulillah. We have been voted number one in Islamic financing by Islamic Finance News Magazine 9 years in a row. Alhamdulillah. We offer home financing in 32 states. We offer commercial financing. And now even we do auto financing and profit sharing savings accounts as well.
Okay.
Alhamdulillah. And our goal is to be one-stop shop for riba-free financing and investing forever.
Inshallah.
Alhamdulillah. That is our goal. And inshallah, this podcast here today, our goal is to, inform everyone how we can go ahead and make financing a lot easier for everybody, inshallah.
Alhamdulillah, good. And what kind of kept you working there for over 10 years? People change jobs and everything, so.
Alhamdulillah, it's just that, when even our motto is like, you do good, you be good, and alhamdulillah, being with UIF, alhamdulillah, I have accomplished a lot. And helping the community, being away from riba is a blessing itself.
Okay, so we're gonna go right into the first question, okay? And I'm gonna give these questions in like a complaint format from clients to really sympathize where people are coming from, and maybe you can kind of release the tension and have us understand a little bit about what's happening when a file gets processed with UIF, okay? Yeah. So for example, someone is getting approved, they got approved for $300,000, they're very excited, they get the offer in, and then they're asked about, hey, submit your bank statement, submit your pay stubs, give me your dog's vaccination records, right? All these things are given or asked for. Why wasn't all this taken care of ahead of time by UIF? Why are they asking me right now?
Well, so first off, you want to see the difference between what was given in the beginning, right? Okay. Was it a pre-qualification given or an actual pre-approval?
Okay,
right?
Let's discuss that.
Right, there is a difference.
Okay.
There is a difference, right? So a pre-qualification is basically you submit your basic documentation, your pay stub, your W-2, your ID, and we do a soft check. And based off of that information, we will give you that letter saying that, hey, you qualified for 300,000. Go shop around and find the house, right? That's
quick question, because we might have some first-time home buyers who doesn't know the term soft check.
Yes.
What is that?
Soft check is basically we are not damaging your, like whenever we check your credit, right? That goes the reporting, right? It gets reported that we checked your credit. A soft check means that it is not being reported. It doesn't harm your credit score.
Okay.
Right? It's just for us to see your expenses and see where your debt to income is, basically.
You're getting an idea of how much they can get approved.
Correct.
And this is called a pre?
Right, the pre-qualification.
Pre-qualification, PQ.
Okay. PQ, right, they call it PQ, right? So this is the beginning stage, right? So that's the PQ versus a pre-approval, right? In the pre-approval, we do extensive, right, literally more extensive. We collect your bank statement, same document as pre-qualification, but we also take your bank statement and gather all of it, and we send it to an underwriter. The underwriter looks at it and then gives a commitment letter, which is the pre-approval, basically. Pre-approval, right? So that means that your file has already been pre-screened by an underwriter, and now you have that.
Okay, so I think sometimes people get confused because, or maybe we're just not aware that, okay, so when I'm going to you and I say, hey, Brother Maruf, I want to buy this house, and you tell me, yeah, go ahead, you're good for 300K.
Right.
You're maybe talking about the pre-qualification and not the pre-approval.
Right, exactly.
And then I went with an agent, I got the house, and I come back, and then you ask me for these documents, then that's for the pre-approval.
Exactly, yes. Okay. Right, exactly. So now, let's say you found the house, right? Like, let's say you found the house, and we gave you a pre-qualification. Let's say that scenario took place. So now we gave a pre-qualification. You said, hey, brother, we got the house. What happens, right? So that's when we go ahead and ask for the additional documentation, and then we'll start the process as far as submitting those documents
So I have a question, follow-up
Yes.
question. Why wouldn't someone just start off with the pre-approval, for example? What's the difference of me starting with the PQ versus the P?
Right. Well, that's industry as well, right? And
Okay.
also the agent you're working with, right?
Okay.
Sometimes you have scenarios where like, hey, I need to submit this offer tonight, right? Sometimes you have scenario like, hey, I don't have that time to have that file, go to underwriting, come back and get the commitment letter.
The house just came on the market. It's a hot house. It's highest and best being called.
Exactly. So in that scenario, you're like, hey, listen, I don't have that. Give me the pre-qualification. Let me submit that offer, and then we'll go from there, right? So that's how, of course.
I want to show the practicality behind why PQ exists, because the first logical question is why even put me through that, right?
Exactly.
And it's because circumstances. Circumstances might want you to go with the PQ. Another point I'll add on is the soft check itself, right? The fact that you don't want your credit score to get impacted. So maybe you want to get a soft check to get an idea of how much you can afford, but maybe your down payment isn't there yet, and you need a few more months to save up money, but you don't want to get your credit score looked at.
Absolutely.
So instead, you get a soft check done. You're like, okay, you know what, 300K, I need 20% down, 3 times 2, 60K. I have 50K saved. I got to save up 10 more K plus closing costs to figure it out. I'm just giving some practical reasons as to why you might want to get a PQ first.
Yes, absolutely.
Okay, so that's good. Let's go on to the next question, right? So now this, now that part is done,
Yes.
and we submit the documents, and you're the loan officer representing you, for example, in this situation, and you're like, great, I submitted to the underwriter. I'm telling the client, great, we submitted everything. You're saying everything looks good, and then there's like radio silence for a week or two, and then we're following up. The client is asking me what's going on. I'm asking you what's going on.
Yes.
Maybe we're in a group chat asking everyone
Yes.
what's going on, and then you're saying underwriter is still reviewing it. What's happening at this stage, and why is it taking, again, from a client's perspective, why is it taking so long to review my 5 documents?
Great. It's a great question, right? So I'll continue from that pre-approval status, and now you found the house, right? So we'll go from there. So you found the house, you guys finished the inspection, right? And then we go ahead, you get submitted the documentation. You and I know we ordered the appraisal, right? So in that background, what's happening here is once we get those remaining documents, I review it, send it to a processor. Again, I'm explaining UIF.
Please.
Right? Our processor, we look at it, we gather it, and we submit it for processing, right? A processor picks it up. Right? This is not an underwriter, it's a processor.
So different role altogether.
Exactly. We add it on so to be more efficient.
Okay.
To be more efficient. So we have that processor looks at it, goes ahead and checks the income documentation, the asset documentation, the credit, and basically does all that for the underwriter and gets that package ready, basically.
Okay.
Again, right?
Okay.
And then it goes to the underwriter. So when it goes to the underwriter, that's where the underwriter goes ahead and does their job and do their due diligence as far as what they have to do, check the credit, the asset, check any type of, the borrower might have things that they didn't even disclose at times, right? That can happen.
So when we're saying it looks good, let's just walk through this again real quickly, because I want to see if I understand this right. The client submitted the documents to you. You texted saying everything looks good.
Yes.
And in this case, it's actually going to the processor first.
Correct.
The processor does a preliminary sift to see, hey, is everything together to present properly to the underwriter?
Correct. Yes.
Okay, and then the underwriter checks it. And I think it's important that we explain this role of the processor because it does add a step to it. Because we're saying it's all with underwriting, right?
Correct.
We probably hate the guy who's doing underwriting. But there are steps that kind of lead up to that.
Correct.
And I want to expose that in a good way because, and I'll explain later why these steps are kind of important. You can share your sense as well. But that's what's happening in the background.
Correct.
There's someone between Brother Maroof and the underwriter, which is the processor.
Correct.
That person will take a few days, I'm assuming.
Yes.
And then the underwriter will also take a few days. Is that correct?
Correct. It typically doesn't take a few days, right?
Oh, how long does it take?
Right, usually when we submit it, it can take to 24 to 48 hours, right?
Okay.
That's
Let's say
typical.
48 hours.
Let's say 48 hours, right? But if you have a client who have submitted that everything, right? Like you and I said that, hey, credit is good, the assets are good, the employment stuff is all set. For that, it will be a smooth process, right? Because then the processor does her due diligence and then send it to the underwriter. And that is a very seamless process, right? Like me mentioning the processor part, it happens very seamless. Because when it gets to the underwriter does what they need to do and give the commitment letter, right? Okay. And like I said, a lot of the times when the client submits those documents, there are things that can come up that even the client themselves didn't think that they need to mention to us.
And we'll
right?
talk about that.
Right, and we'll talk about that, right? And so that's what it is. So once it gets to the underwriter then issues the commitment letter, right? So when that commitment letter comes in, that's when, of course, your borrower will say, well, oh, okay, well, they're asking about this item or that item, right? There are additional, conditions that are there, right? So in a scenario where you submit a file, and let's say it's a very smooth file, you and I can say this is a very smooth file, a slam dunk.
Yeah.
Right? Like you give me a file
slam dunk. You have an engineer who's been working for 5 years, steady income, going. He earns 100K. He's applying for a house that's 300K. Very much with his DTI is like 47%.
Exactly right. So that's a slam dunk. And he comes in, you get a commitment letter. When you get that commitment letter, there might be 1 or 2 or 3 items that we need to take care of. And these are the stuff that even the engineer himself would say, well, why are you guys asking me that question? Right. Exactly. Right. So, of course, funds is one of those, right? Funds is one of those items like, hey, did the engineer have the funds ready, right? Or is he getting some funds from his relatives, his family members, and so forth, right? So we need to track that. He needs to go ahead and take care of homeowners insurance. We know that we can take care of that as well, right? Okay, and if he has any other debts or anything that we need to take care of, those items the underwriter will mention on the commitment letter, right? And pretty much that's it. That's pretty much it.
And one thing I want to mention to people is that, for example, on a monthly basis, an average or a high-performing loan officer, how many files are they usually dealing with?
It all depends. Yeah,
in a range.
I mean, it could be certain, officers are dealing with, 10.
So let's take. There's a reason why I'm asking this question. So let's say the guy has 10, right?
Right.
And that's one loan officer.
Right.
And then he's sending that to processing.
Correct.
Right. He's working with those files, and then you have another loan officer, and then you have another loan officer. There's a thing called a queue. And I want to highlight this
pipeline.
point.
Yeah, we call it the pipeline.
The pipeline, right? Basically, a stack of files that the processor has to go through, and then the stack of files the underwriter has to go through.
Correct.
And this is something from my experience that I realized that if you submit the file at 10 a.m., there's a big difference than you submitting the file at 2 p.m.
Correct.
Huge difference.
Correct.
Because before lunch and after lunch, if you're anyone who's worked in corporate, you know there's a difference between before lunch and after lunch. Sometimes what ends up happening is people are busy with their work, like clients, and they're working at their job from 8 to 5, and they're submitting the documents maybe towards the end of the day, and at that point, nobody is at work, for example, to review those files. So technically, in your head, you're like, I submitted this on Wednesday. No, actually, you submitted this on Thursday.
Correct.
In terms of business hours wise, it wasn't even looked at until Thursday. In reality, it entered the queue on Thursday. By the time it comes to the top of the queue, it's Friday.
Yes.
Does that make sense?
Correct.
And that's when the processor is looking at it. Then the processor finishes it. And maybe the processor finishes the work by Friday, but let's say we said 48 hours. So that means what? Monday. So what happened? The weekend went by. So in your head as a client, you're looking at this. You're like, Wednesday, Thursday, Friday, Saturday, Sunday, Monday. Where is it at? It's still not with the underwriter because Monday was a 48-hour deadline. Now the processor finished it. He sends it over to the underwriter. Correct. Has a queue of his own. And that comes in. Now the next Thursday comes. You have a whole week that went by. Right? I'm just giving a... Correct me if I'm wrong.
No, this is right on the dot. Yes.
Yeah.
That's exactly what takes place.
Yeah.
And of course we try our best to expedite it, right? Like we have files that that hey, this needs to close ASAP, right?
Yeah.
Like you have to go ahead and prioritize it, and we work with the agent.
Escalations are there.
Yes, escalations are there. But yeah, that's pretty much.
And the reason why I'm sharing all this is because look, and to be honest, I'll tell you, even as an agent, if I were to come on this camera and say I haven't made mistakes, I would be lying. I have made mistakes. I've dropped the ball many times. Human error exists. Correct. And that's kind of what I want to mention. I'm sure you've had some mistakes. I've had mistakes. Sometimes people come on the camera to paint this perfect picture. And the reality of this interview is to show that everyone is human and everybody makes mistakes. Correct. So there could be a shortcoming from the agent side, from the loan officer side, from the client side, from the processor side, from the underwriter side. That's 5 factors. When you have 5 potential sources of error, delays are bound to happen. Correct. Just to kind of just paint the picture a little bit better than just saying everyone is perfect. If everything is perfect, then why didn't it get done within 48 hours? Right. Let's go to the next question. Sure. The next question is this. Appraisal is done.
Yes.
I'm at the finish line. Everything is looking good. And then for some reason, closing date is set, and then you hit me up saying, oh, we got to talk about this. We need some more documents. I've had this scenario happen often, right? And people are upset. They're furious. I've had clients who are 3 days away from closing, and they're refusing. Not one, multiple clients. I've had, I think, 4 or 5 brothers specifically tell me that I will not be closing this house if they ask me for more documents.
Yes.
Documents which they have. And I understand why they're saying that. They're frustrated. Like, logically, it doesn't make sense. They're frustrated about the whole approach, and they're like, I have more than enough money in my bank. You told me earlier if the engineer needs to gather funds. I'm an engineer who has 100K saved.
Right.
Why the heck are you coming back to me asking me for more? The money is right there. So what's happening here?
So in those scenarios, I know we have many examples because we did many deals together, right?
Yeah.
We can talk about the engineer, like
an example.
It's just an example, right? Like, hey, listen, why are you guys asking me for
Yeah.
something else, right? So there could be certain things that comes out towards the end of the financing, right?
Mm-hmm.
You know, we do what's called a soft check towards the end to make sure that engineer himself didn't go ahead and buy a boat or a car. Right?
In the middle of the process.
In the middle of the process, right? He thinks to himself that, hey, I submitted everything, I'm good to go. You know,
furniture.
It could be furniture, exactly,
Yeah.
right? So he probably went ahead and went to Gardner White and financed a lot of furnitures, right? What that could do is take his DTI higher now.
What's the DTI?
Debt to income ratio, right? That could take his debt to income ratio much higher than, let's say it was 47 when we started the process. Now it's 51 plus, right? The DTI is high, debt to income is high. So now we're going to tell our engineer buddy that, hey, look, we were good to go. You went ahead and you financed a few other items that is here that is showing up in your soft check. Now you need to take care of this, right? Now you need to go ahead, either pay it off, and we need to go ahead and bring the DTI down or increase your down payment, right? So we give you those scenarios to them. So he's like, okay, he's just frustrated, right?
Yeah.
You know, and he's gonna be like, okay, well, no, I don't want to do this and stuff. So we work with them, try to find a solution, right? We had a live example where we were doing a deal for one of our clients together, and we were all set. We were submitting that file for clear close.
Yeah.
Like we were all like planning for closing. Come to find out what happened. The borrower went ahead and financed the car.
Yeah.
Right. He went ahead and financed the car. So we had to find a solution to go ahead and pay off that debt or find additional cosigner to go ahead and get the deal done. Right.
Yeah.
This was one of the deals we had to go through. Right. So there are many things that takes place towards the end. Right. To get the clear to close. And that's why you have scenarios it happens like that. Right. We do 2 things towards the end. Right.
Okay.
We do what's called the soft check to make sure that you didn't add on any new debt. Okay. And we also do what's called a verbal verification of the employment as well.
Okay.
Right? To make sure that you're still employed.
You're not fired.
You're not or laid off. Right?
Yeah.
Or laid off, right? Because those things happen. Trust me.
100%. Yeah. I've seen it. Yeah.
Yeah. So those are the things that we do. So that's why you have clients that will come say, well, I thought we're good to go. And now why are you guys asking me this? Right? So these kind of questions that can come about and where the frustration could be, like created. But again, if you're working with an experienced person that knows this
what to expect
exactly, or even the agent, the agent himself can say that, hey, listen, you know what?
This is what I should keep in mind.
Yeah, this is what you could keep in mind, right? Scenarios can happen where like they have large deposit that needs to be questioned, right?
Why is that?
Why? So
like I got a large deposit, good for me. Why is that a problem?
No, it's because we are audited, right? And these are audited. Anytime we can be asked the question that, hey, Saeed went ahead and bought a house and he had a $50,000 deposit.
Yeah.
Why wasn't this asked about? Like, why, you know, and we could be liable. So we have to go ahead and find out what is that 50,000, right? So you can say, well, hey, my brother lended me 50,000. You know, here are the documentation. So we document that and go from there, right?
And I'll add another thing that can happen. And these are a few things that happened from my personal experience. I had a client, and when they were doing the check, they found that there was a bill for Windows that he got installed, but he had actually paid off the bill. So again, remember, human errors can happen.
Yes.
So it's not that he didn't pay off the bill or that he's a liar. It's that in the system, for whatever reason, it showed an unpaid bill. So they didn't say he has to go pay the bill again. What basically they said was, give us proof or receipt that this was paid off.
Correct.
So he had to contact the window company, which is a hassle. Trust me, I know it's a hassle because you already paid for it. Why is it even showing up? Here, I'll take the blame a little bit off of UIF in this case. It's showing up not because UIF looked for it, but that's how it looks on the public records for your credit report.
Correct.
Your credit report shows that. So UIF cannot change your credit report.
Yes.
UIF is looking at what your credit report has, and they're telling you what they're seeing.
Correct.
And they can't legally proceed with the file if they see that there's a bill, outstanding bill that's owed to a window company, whether or not you paid it. So in reality, you can blame the credit report company that's reporting it, but they're just really just going on based off what they see.
Correct.
So that brother, he ended up getting the proof. He called the window company, said, please send me the receipt. They sent him the receipt and it was resolved. That was one scenario. Other scenario was what he said about the car. That also happened. Someone ended up purchasing a car through UIF. So when you he said it earlier, they provide auto loans as well. So they obviously were like, hey, you can't be doing both at the same time, right? It ends up adding to your debt. And the third example is this. I had someone who was good to go, but check this out. When they got their approval done, it was at a certain rate.
Okay.
And after they locked in, it was at a higher rate.
Yes.
And that limit was so substantial for them. That change.
The DTI.
Yes. The change was affecting the DTI to a point where they were not approved in the last point. So what they had to do was they had to put more down payment.
I see.
So literally, because let's say you're with Maruf Bhai and it's January. You're like, hey, Maruf Bhai, give me an approval letter. It's, how long is it valid for?
The approval?
Or the 3 months, right?
Yeah, 3 months.
3 months. So let's say in January this January you're looking, and let's say the rate is at 7.3. All right, cool, sounds good. You're looking, January goes, February goes, Ramadan hits in March, and somehow you find your house in March. But the rate in March is like 7.8. And you are going at the maximum amount of your approval. So you're approved for 300K and you're getting a house for 299. So that rate is going to impact how much you can actually afford of the house. So now that it was 7.3 for 7.3 to 7.8, that has a huge impact. Now you have to put more down payment. You can't put 5% down anymore.
Correct.
You might have to put 10% down. And I learned that through actual experience. I'm not a loan officer. I don't know any of this stuff.
And prior to coming here, I had a client call me.
Yeah.
And the same scenario, right?
Yeah.
And he's like asking me, hey, brother, I'm getting ready to go ahead and purchase a property. What do I need to do? And so forth, right? And I told him, listen, I gave you an approval 5 months ago.
Yeah.
And you're expecting that 5 months ago
to be the
same to make sure, can I still qualify for that, $500,000 house and so forth.
Yeah.
And I'm like, listen, things have changed.
Yeah.
And that's what it is. That the fact that, hey, people get a pre-approval 5-6 months ago and expect that, hey, you know what, it's going to be the same thing and my DTI is going to be the same and whatnot. And especially with that client that had that issue and had to bring the down payment.
Yeah.
These kind of scenario happens. That's something that we don't control. You don't control and I don't control.
Right? Go ahead, yeah.
That's we call it, that's a bucket we don't control.
Yeah.
Right? You go ahead and you inform your client that, hey, this is what I quoted you.
People are feeling like you're misleading us, but you're saying you don't control it.
We don't control that bucket.
Okay.
We don't. Trust me, we do not control that bucket, right? So if it was something that we do, like for example, back 5 years ago when the rates were being 2-3%, right? Exactly, right? Those days are gone. Right? Those days are gone, right? So what's going to happen here is that we tell the client when we are giving the pre-approval that, hey, this is what you're qualified based off of your income, based off of your debt, and this is what you can afford, right?
Yeah.
Now, if the client takes 7-8 months to go ahead and get it, that same rate is not there anymore.
Yeah.
Right? And that's going to happen where, you'll have the issue with the debt to income and stuff.
Yeah. That's good. And I'm kind of glad you mentioned that. Okay, so what I'm going to go into this question about the process itself, right? Because we've been saying a lot of things, and maybe it's easy for you and I to discuss it because we know the process. Correct. We're familiar with it. Yes. But for someone who's watching this, maybe they did think about buying a house for the first time, right?
Right.
Can you simply give me the main blocks that they have to go through, right?
Yes.
The milestones of getting to a house where they go to the closing table, they're signing, and the key comes into their hand. Can you map that out for us?
Yes, absolutely. Okay, so the very first step is, of course, the pre-qualification. Let's just start with that, right? This is where we grab your basic information, your 1-month pay stub, your W-2, your ID and whatnot, right? And we do a soft check, right? Okay. Now, keep in mind, if you're self-employed, we're going to talk, I can touch bases.
We can talk about that. That's very
I'll touch bases on that one. But let's say we go ahead, we give you the pre-qualification letter, you go ahead and you start finding a house, right? So once you find the house, right, you sign a contract, you have the contract in hand, you come back to us and you say, hey, listen, I have this house, inspection is done, I want to move forward with it, right? So as soon as you go ahead and let us know, of course, we're going to go ahead and order the appraisal, right? As soon as you give us that purchase agreement or you mention that address, by law, we have to give you what's called the loan estimate, right? Okay, which is by law, we have to give that within 3 days. Okay. So you have to go ahead and sign those documentation, right? You sign those, and then we move forward with the process, right? That's when the file goes to processing.
So this is like the first block. Let's put it into blocks.
Blocks. Okay, this is the very first block,
Yeah.
right? So let's just say we got to the first block, we ordered the appraisal now.
Okay.
Okay. The second block is where the processing takes place, right? Okay, we'll gather additional information if I need to, like for example, you didn't submit an asset statement, a bank statement, so I'll ask for that. Okay, any other documentation that I need to do, I'll ask for that in the second block, and then I'll go ahead and I'll submit it to the processor.
Okay.
The processor prepares it, does what she or he needs to do, and then goes ahead and sends it to the underwriter. Okay, so now the underwriter has it. So let's just say that's the second and third block. Okay, so the underwriter will review everything and go ahead and give the commitment letter.
How many? Okay, keep going.
Yeah. So the commitment letter comes in. Now you know that, hey, my financing is approved.
Okay.
Okay. Now I have a commitment. I'll have here and there.
Commitment letter meaning the approval letter.
Approval letter, right?
Yeah.
Approval letter, commitment letter. Now you know that, hey, I am gonna get this house. I am gonna get this house.
Yeah.
I just need to take care of these small items, and I should be good, right? When that comes in, we'll go discuss it with you. You take care of it. We'll go ahead and finance, lock it in. Say whatever your monthly payment is, we'll go ahead and lock it in. You'll go ahead and get your homeowner's insurance and so forth. And then you give us those documentation, right? When you give us those documentation and those conditions, we send it back to the underwriter.
Okay.
For one last.
So second check with that.
Second check, right? So when we get those conditions and we send it back to the underwriter reviews everything, does that soft pull we mentioned towards the end, does the soft check,
Employment verification.
final employment verification, and make sure nothing changes, and then they'll issue the clear to close. And as soon as you get the clear to close, you're good to go. Now,
talk to me about the clear to close and the closing date, the timeline.
As soon as you get the clear to close, of course, you can go ahead and schedule closing. I'll leave it up to you guys. You can close it right away. I mean, the next day usually, but that's in a rush. Usually they'll do a day after, right? They'll day after. But as soon as you get the clear to close,
ideally, I would say like 2 days after, mainly because from my experience, it's better to do that just so when you have the clear to close, the buyer can kind of sit down and make sure to review all the numbers together.
Correct. Absolutely.
I think there's a disconnect between the pace that the lender is working and the pace that the buyer is working. So at the beginning, the buyer is working really, really fast.
Correct.
And the lender isn't working really, really fast because that's when they're gathering information. And at the end, the lender is working really, really fast because they're executing what they gathered.
Correct.
And the buyer's like, whoa, what's like real quickly within like 3-4 days, a bunch of stuff happened. Now we're closing. And I've seen in my experience, a few buyers feel a little bit startled or like feeling rushed because they're on a certain pace. They're like, oh, maybe, and then you're like, no, closing, we got the CTC, we're closing tomorrow. Like, what do you mean we're closing tomorrow?
Yeah,
right?
you're right. And
Yeah.
And those happens, and then like that's pretty much the process. Now, if you're self-employed, I know I said
Let's
briefly,
talk about that. Yeah.
if you're self-employed, different requirements, right? We're going to look at your tax returns, your business returns, or if you're nowadays we have clientele does like Uber, DoorDash, or a few other things, right?
Yeah.
So we will need your 2 years tax returns, right?
Yeah.
We'll need those.
You need to see consistency. What are you looking for? Just for the self-employment
Yeah,
guys?
so you want to see your 2 years tax return. Now, if you have your corporation, right, we want to see the business tax return. Okay, and we also want to see 3 months business statements, bank statements. Okay, an additional documentation would be like that. Hey, we want to go ahead and see your IRS transcript, right? So those are the things that are ordered in the background, right? We'll go ahead and do that. So we probably will ask for a balance sheet or a profit and loss statement as well to see how your business is doing, right?
Okay.
So these are additional documentation that will come about if you're self-employed, right? In an ideal scenario, like for somebody who's W-2, like we mentioned about that engineer buddy that of ours, an ideal scenario to start the process, you can get the financing done within 10 days if you want, if the buyer wants, if he truly wants to get it done. He has his assets ready, okay? He's been in the job for more than 2 years, right? His credit is good to go, right? You bring that client in, you tell him that, hey, listen, I want to go ahead and get this done within 10 days. Can you make it happen?
Yeah.
Right? We order the appraisal, right? When we submit that file, the processor looks at it. Processor already does everything, send it to the underwriter. Underwriter comes back. That commitment letter might have just 1 or 2 items.
Yeah. Because they don't have much going on.
Right. Just that
Their file is
commitment, right?
very
That approval letter,
clean.
the commitment letter would just say, hey, lock in that rate. Go ahead and get the,
And is that when you lock in, when you get the commitment letter?
you can lock it in anytime.
Okay.
You can start it as soon as you get the purchase agreement. You can lock it at day 1, or you can lock it towards the end.
So let me give you a bite to capture for the reals.
Yes.
Let's answer this question.
Yes.
When should you lock in? Because I've had clients freak out over this, man.
Yeah.
Tell us when should you lock in?
honestly speaking, again, it's a bucket we don't control, right?
Okay, that's the first premise.
Yeah.
Pay attention to this.
Yeah,
part.
it's a bucket we don't control. But what we like to do is we like to inform our client that, hey, as soon as you start the process, we'll let them know that, hey, this is what your payment is looking like. Based off of today,
Yeah.
this is what your payment is looking like. Do you want to go ahead and
Well, clients sometimes just wait, bro.
yeah, and client will say that, oh, brother, I trust you, we'll do the best for you. I'm like, no, it's great you trust me, alhamdulillah, it's great you trust me, but it's going to be ultimately up to you to make that decision.
Okay, so this is, I want to make sure we clarify this,
Yes.
because a lot of people put this on you. If not, then it'll come to me, but mostly it'll be on you, right?
Right.
It's like, hey, when should I lock in? Ask Maruf, when should I lock in? And I'm like,
yeah.
how the heck is Maruf going to know the future?
You're right.
Do you know the future? No.
No.
None of us know the future. So what is with the rates? Does it change? Does it fluctuate? Give us an idea so we
Yes.
can understand what
So
really happens.
there's multiple things that affects the rate,
Yeah.
right? Of course, and then the job market, the U.S. economy, and all these things that factors in, right?
And they're expecting you to know all this.
Yeah, and they're like, well, if I knew the future, mashallah, right? But we don't, right? We don't know what's going to happen with the market and whatnot. So we just let them know that, hey, listen, this is based off of today.
Yeah.
If you like the payment, bismillah, go ahead and lock it,
Yeah.
right? If you like it. But we do let them know that, hey, this is what's happening. There might be a job report coming up or something coming up. We do give our client that information, right? Like, hey,
Let me give you a client
Okay.
who said that, Saeed, why don't I just wait out a month or two?
right. Oh, mashallah. Yeah. And see, if you want to go ahead and wait a month or two, you can't blame us. Like that's all on you, right? Maybe he did their own research on Google and found out.
No,
that,
they don't know. They're just asking. They're asking me,
Yeah.
why don't I just wait out a month or two? How would you answer that question?
Yeah, no, that's. I mean, I don't want to say it's a bad idea, but it can be, right? Like we used the earlier example, right?
Yeah.
I know people that were waiting to buy a house even during the pandemic when the rates were like 2-3%.
That's crazy.
And until today, they don't have a house.
They haven't. Yeah, it's
They
tough.
don't have a house.
By the way, guys, it's going up.
Yeah, yeah. And of course, that's something we don't control,
Yeah,
right?
yeah.
It's if you need a house, bismillah, go for it. It is an investment, of course. That, of
Yeah.
course, right? Go for it. And inshallah, if the market does change, that we hope that it comes down, then you can always refinance, right? The
Yeah.
refinancing is always there. But again, that's something, again, we let our client know about going back to the rate. We let them know if they want to go ahead and lock it in, they can lock it in that payment. They're good to go. Going back to that engineer client, right?
Yes.
He locked it in. He shopped for homeowners insurance. He gives us those 2 items. We send it back CTC. Think about that. Think about how simple that process is, right?
It's a matter of 10 documentations, max.
Max, maybe more here, more or less here
I'm
and
just
there.
counting, yeah.
Right, exactly. And you're done. But you can see that, okay, like, why is it so difficult, right? Well, hey, why is it frustrating? And why are you guys asking me for this? And these kind of scenarios comes about because you have to see, you as an applicant, there are things that come about, right? Like a lot of us, we have so many scenarios we can touch bases on, right? People have multiple properties, right? People have debt that they don't disclose. People have houses they don't disclose. These kind of things come about. And like, oh, why are you asking me that? Why do you need to know about that? Right?
Yeah.
No, we have to, right? We have to calculate the proper debt to income. We have to see proper documentation of the assets and so forth.
I think I want to just touch on the culture a little bit. There's a reason why I think people have that. One, because money is a very sensitive and taboo topic. Nobody likes talking about money to begin with, right?
Right.
From what your income is. Now I know you see my income. That's
Right.
already making me uncomfortable.
Right.
You already saw my income. Then you see my tax returns, making me more uncomfortable. Then you see my side business. I'm just getting more and more uncomfortable with the process, right?
Yes.
It's like I'm exposing my innermost thoughts. And people are not used to doing that, which is what's leading the, I guess, hesitation, right?
Yes.
And then it's more like, okay, more. And that's leading the frustration. Here's something that I would probably tell the viewers is that you need to kind of expect that when you're trying to make a purchase for over $200,000. Think about what you're trying to do. You're trying to get, let's say you're getting a house for $200K, you put 20% down, that's $40K.
Correct.
You put down $40K, you're asking someone, give me $160,000. Why?
Yeah, well,
Think of
yeah.
what you're asking. The ask is big, right?
Right.
Yes, there are places that can probably cut corners and do things, but let me tell you why it's good if it takes a long time. I'm going to put a spin to this so you can understand. The reason why we had the recession was because of lack of due diligence. Yes. Because people, underwriters, loan officers, lending institutes were not strict. They were loose. They were like a loose cannon, approving everybody left and right. Appraisal reports came back. appraising houses at whatever needs to be appraised to get the loan approved. And that's how you get people who get ripped off. So you're buying a house that's worth 200K and the report says it's worth 300K. Aren't you getting ripped off? That's what happens when you cut corners.
Yes.
What's happening now since the recession and the crisis with the housing industry, we have limits in place to make sure those things don't happen again. So when people ask me questions like, when is the next recession? I'm like, brother, do you know how many laws have been implemented since Barack Obama after he came in to ensure that we don't have that issue again? If we have a housing crisis again, it means something else is going on, like COVID or something, which is something beyond our control. So these bylaws and these filter process and processor and underwriter, it's to make sure you can actually afford the house.
Absolutely.
Last thing you want to do is you got a house, you're all happy, you buy the house and you can't afford the monthly payment.
Correct.
Look, at the end of the day, UIF is looking out for themselves in the way that they don't want to give you 160K if you can't pay it off. That's their way. So if your debt to income ratio is so high, they're going to look at you as an at-risk buyer. Like, this guy's debt is not managed properly. If we give him 160K, we might have to foreclose his property. So from a business perspective, that is what is happening. But that also protects you as a consumer. It's doing both. Who do you think cares about the money more? You, who's putting in 40K, or UIF, who's putting in 160K? UIF. But as a return on that, you get to be protected because now you're not buying into something that you can't afford. I always tell people, buying it is one thing, affording it is another. You can buy a car for 30K, but if you can't afford the maintenance on that BMW, don't do it.
Yeah, and that's a key part that you mentioned, maintaining it. Right? Maintaining it. So same thing, we are protecting ourselves and you as well, as a buyer, right? Because at the end of the day, we wouldn't want to go ahead and put you in something that you cannot take. And we had scenarios, alhamdulillah, because we offer Islamic financing, we had scenarios where a client called us and said, hey, listen, I'm going to get laid off. And I can't make the payment anymore because there are people that are having, it happened in Michigan, of course, with the whole strike and whatnot. People call they're like, hey, listen, I can't make the payment anymore, or can I pause it? And this is a real life example. The client called us. We went ahead and said, you know what, go ahead, call our servicing, and he did. And they went ahead and they froze his payment until he went back. And this is one of the benefits of course, dealing with Islamic financing and a company that, of course, our goal.
There's no recourse.
Right. We want to make sure that, hey, listen, it's our investment. We're going to protect our investment and protect you as well, right? So, alhamdulillah, this is a blessing of course, dealing with, Islamic financing companies like UIF.
Alhamdulillah. And I hope we were able to kind of address the steps that you have to go through when your file is being reviewed with UIF, for example. One thing that I would say, for example, Maruf Bhai has been working in it for 10 plus years. So what he would be doing is he's going to take probably precautionary measures when he's working with clients, or preventive measures. But if there's any loan officer that's watching this, I just have one advice for you. Let's say you're new, right? Sit down with your client and explain to them what to expect. If you don't tell them what to expect and then it happens, it is a surprise. For you, it's an everyday thing. For them, this is the first time it happened in their life. So if you don't tell them, brother, it's going to take 2 weeks for this and 2 weeks for this and 2 weeks for that, if you don't break it down, kind of like how he mapped it out, that client will be upset. Rightfully so, because you didn't inform them, you didn't educate them, you didn't empower them with knowledge. So and same thing with real estate agents. Don't start helping people if you can't actually inform them and empower them with knowledge. I know it's hard because you already have it in your mind, and that's why we're doing this video. So if you don't want to talk about it, just send this video to the client.
Right? Watch the whole video.
But it's your responsibility as someone who's working for an institute that's supposed to be Islamic to make sure that you do everything the Islamic way, to make sure people are aware of this. But Maruf Bhai, thank you for coming on.
Absolutely.
Do you have any concluding thoughts? Anything you want to share with us?
Alhamdulillah, no. I think hopefully we clarified a lot of the issues or concerns people may have, inshallah. And if anybody have any questions about Islamic financing or want to know, as I mentioned earlier in the video, of course, we offer home financing, auto financing, and even profit sharing savings accounts as well. So alhamdulillah, again, we are the one-stop shop for riba free financing and investing, inshallah.
Okay, Jazakallah khair. Thank you, Maruf Bhai.
Thank you.
Take care.